Hey everyone, this is Dale Anderson. So we recently had a webinar regarding the UK property market, what we expect in 2025. So I just wanted to do a quick recap of the webinar, just so we can cover the main points we discussed and give you an insight into what's going to be happening in 2025. So first up, before we dive into the AI and the prop tech section, which was all very exciting, we're going to talk about the 2024 markets and what we're expecting in 2025. Whether you're a landlord, an investor, or just someone keeping an eye on the market, or give you some key takeaways, hopefully, and be useful in your decision making. So here's the slides that we did. We had the privilege of having Sam Smith, a co-founder and CEO of PropServe, which is a technology-driven property solution. And then we also had a feature on Crystal Roof and a number of other platforms, which we'll go into later. So just as a recap, we want to go into 2024. I'll be sharing some data here with you. So as you can see, currently interest rates and rental yields, we've got the mainstream Savills forecast here showing the price projections. As you can see, the Northwest has been doing quite well with 29.4%. The main thing to start with is interest rates. Rates have definitely affected people. They've been going up quite a lot since COVID due to inflation. But the good news is, after peaking at 5% in late 2023, the Bank of England gradually reduced the rates to 4.75 by 2024, and then a further rate reduction just recently at 4.5%. Which is good news. The easing of rates has helped improve mortgage approval slightly, making it a bit easier for both buy-to-let investors plan ahead for the next year or so. On the Bank of England as a reference, you can see why interest rates were high previously and how they may be expected to fall in 2025, possibly a few more points to drop, which is great. And it also explains who makes the decision on interest rates here. So that's at the Bank of England. So as we carry on, we need to also then look at what's been happening with the rental yield market. In certain areas, we've seen rents start to go up, especially in places like Manchester. We saw yields of around 6 to 7% rental yields. And then in Liverpool, 6.5% gross yield. In Birmingham, also doing really well at about 5 to 6% in Digbeth and the Jewellery Quarter. So quite a lot of activity going on there. And then next, we can also look at the rental yield chart. This is Zoopla, the latest housing rental index by Zoopla. Takeaways rents are 3.9% higher over the last year. Rental inflation ranged from as high of 10.5% in Northern Ireland to low of 1.3% in London. And there's an imbalance between supply and demand, which is narrowing. So as you can see, rental demand falls from a high base as supply recovers off a low base. Average rents for new lets in the UK is £1,270 as of October 2024. Rents have risen 3.9% in the last year. So as you can see, rents rising at a slower pace, but they certainly did jump up quite a lot there. You can see between 2021 and 2023, supply demand imbalance narrowing. So rental growth is slowing as the imbalance between rental supply and demand narrows. Rental inflation is starting to cool, but there has been quite a lot of growth, as you can see by this map. In particular, the Northwest and other areas up north, and then London, a 1.3% increase, Northwest, 5.9%. With the charts there, as you can see, Liverpool number 3, Newcastle, Cardiff, Birmingham, Manchester's on that list as well. So yeah, we definitely think Manchester, Liverpool, and Birmingham in particular are a good option. In terms of the bigger picture, we are seeing a lot of demand, like Manchester, Liverpool, and Birmingham is a top choice for overseas investors looking for capital growth. But there is also places like London, commutable London, areas like Croydon, Barking, and Dagenham, which have seen some good growth as well. So there's a lot of interest from buyers, in particular Middle East, Hong Kong, Africa. We are seeing a lot of demand from those territories, areas we do plan to expand this year and hold more webinars and events. Investors looking to get money offshore into the UK. There is some more reports here. There's the house price index by Rightmove, which also gives you a bit of a understanding of what's happening in terms of regional trends, and that will give you some stats. You've got your regional trends map there, which shows the net change in values of house prices. over the last year up till January. And then it gives you the average asking price trends, the 5-year asking price trend there. As you can see, prices have been quite resilient. We are now starting to see price changes positively again, with interest rates coming down as well. I think the main thing is interest rates coming down. If they hold steady at 4.5%, possibly dip to 4% by the end of 2025, that's going to be good news, assuming inflation continues to come under control. So for investors, that of course makes affordability a little bit easier, and it makes properties a bit more affordable, cash flow positive. So you take a mortgage, and then in most cases, your rent will be covering that part of your debt, which is good. So the UK still has a massive shortage of housing. Northern cities and commuter hubs are feeling it the most, with places like Manchester, Media City, and Birmingham's financial district seeing strong demand from professionals, which will likely push rents even higher in 2025. Things to consider: geopolitics, tax changes, and EPC regulations. Of course, it's not just interest rates and rents we need to watch. We also have to consider government policies, things like potential changes in stamp duty, landlord tax relief, and post-Brexit trade rules. And let's not forget about EPC and sustainability rates. Of course, this has been in the news lately that they're pushing by 2030 to make all properties an energy rating performance of C rating. So, or they could face extra costs. So that's something to think about. So to wrap things up, 2024 saw rates ease slightly, the stronger rent yields in key cities, and steady overseas investment. Looking ahead, things are looking more promising. We also have the rental price tracker here that you can check out, which also shows you the projected growth and rent changes in the markets. Place to look, and also Zoopla for some information, the Office of National Statistics. Get in touch if you need any of these resources. We'll be able to send that through. To recap, stable or slightly lower interest rates this year, continued rental demand in high growth areas. There's going to be potential tax and policy changes to keep an eye on. And the fourth thing is EPC compliance becoming a bigger issue for landlords. So investors, that means opportunities remain, especially in high yielding regional cities, but you need to keep an eye on government policy, and financing will of course be key as well. So in the next video, we'll talk about AI in property investment and prop tech, some of the latest software. So that's quite exciting. We'll go through then how you can apply that to help you make more informed investment decisions. I hope this video helps. Please click the like button, subscribe, and share this if you found it useful. All the best. Take care.